How long have you been doing mortgages?
Since 2017.
And have you figured out a way to explain it in a not boring way, or is the answer always everyone needs one?
Oh, wow. That's a great question. You know what? I'd like to think that I explain it in a way that humanizes it. I've actually been told that too, is that I explain it in a way that people can understand it. I try to make it relatable and use analogies that people kind of make sense. We talk about down payment assistance programs, right? This is one of those things where I kind of make it make sense. A down payment assistance program is great for people who need it. It's not great for people who want it. There's a little bit of a distinction, right? If it's the difference between me getting the home and not getting the home, yeah, the program's awesome. But if it's the difference between I just want to get free money, well, it's not really free money. So what happens is in those DPA programs, down payment assistance programs, you get the appearance that you're getting a benefit without actually getting a benefit, because either the rate on the mortgage that you are getting is a little bit higher, or there are fees or something like that. And then I use the analogy that most people are familiar with in a car situation. Cars advertise, sometimes they advertise like 0% interest or 1% interest, ridiculous, like no interest. You think, oh, that's awesome. I'm getting a deal when I go buy this car. The fact of the matter is, if you don't take that financing deal, the dealer will actually sell you the car for less. So much less that it might actually be cheaper for you to pay interest than it would have been to get the 0% interest financing. It's the appearance of value without actually giving you value. And so having to explain that to people in a way that kind of makes sense is what I try to do all the time.
I'm Cole Spicer, and I'm here with the Loan Doctor on the Loan Doctor podcast. We're going to be talking about this and more. Welcome to our waiting room. Someone like me, I'm reading this right now, and the guy who runs Fannie and Freddie, way over my head. Can you dumb that down too? What is Fannie and Freddie?
So Fannie and Freddie are Fannie Mae and Freddie Mac are secondary market providers of mortgage-backed securities, buyers of mortgage-backed securities. So most loans.
Break it down even more. What's the secondary market?
Okay, so the secondary. Oh, okay, this is good. I'm actually glad you're asking. So the secondary market is, again, if we were to use it as an analogy, right? Think about the NFL, right? The NFL, all the teams play by the same set of rules, right? Right. So the rules that they play by, whatever the NFL rule book is, Fannie Mae and Freddie Mac, they provide the rule book for 90% of the loans that are done. Okay. So and the reason that they do that is because they buy mortgage loans, and when a bank sells a mortgage loan to the secondary market, what happens is it frees up their capital. Because if a bank kept the loan on their books, then they would have to have deposits. There's lots of formulas how that goes, but they would have to have a certain amount of deposits for all the mortgages that they are holding, and eventually they'd run out of money and not be able to do mortgages. So the system is set up that you can take mortgages that you do and sell it to the secondary market, and ideally, the advantage of selling it to Fannie Mae or Freddie Mac, those players selling it within their rule book, is that the rates are a little bit better because they're partly subsidized by the government.
Oh, okay. Subsidized by the government? That gets a little tricky now.
Well, what happens is they're
public?
They're pseudo government public agencies.
Okay.
So there's a government component in it. The way that's done is, if you look at the rest of the world, the United States has 30-year fixed rate mortgage loans. The rest of the world doesn't. That's an anomaly around the world, and the secondary markets kind of allowed that to happen, where people can lock in, and a 30-year fixed rate mortgage is one of the best hedges against inflation that exist, right? So if I get a mortgage today at 6%, I'm borrowing the money at 6% for 30 years, and the world collapses, and who knows what happens, or we come back to where it was in the 70s, and rates are 17% on mortgages, and you're locked into that 6% rate, you're banking money. Because also at that time, if interest rates are at 17%, your CD is probably paying 13.
Is there like, for someone to make it make sense to someone like me, is there another example of Fannie and Freddie in a different industry, like where they're kind of a part of the government, is what I'm gathering? They work hand in hand with the government, but they're still their own?
I would say to a certain extent, like Obamacare.
Okay.
Would be similar, right?
Yeah, that makes sense.
So you have private and government insurance. Obamacare sort of fits in. Look, it's not cheap, it's not perfect, right? But what it does is it enables people who couldn't get insurance, who couldn't get placement because they have existing conditions or stuff like that, and so they're able to get insurance. But it also depends on pooling with people who are good. So the secondary market allows lenders to, one, do loans with less than 20% down. Mortgage insurance does that too, but that's part of it. It mixes in people with really, really high credit with people with moderate credit to defray some of the risks and stuff like that. But it's all done for the benefit of the consumer, and relatively speaking, especially the rest of the world, it works really well.
Okay. So the guys who run Fannie and Freddie just got named to a job in national intelligence.
Yes, Bill Pulte.
What even is that?
His job in national intelligence?
Yeah. What's the correlation?
Well, it's not. I mean,
it's just interesting.
I don't want to get political. Well, it's interesting.
That's what the Loan Doctor podcast is for.
Yeah, right. It's interesting in that he was pulled from his post, and it's going to affect how the secondary market does a couple things.
Okay.
But it's, whether or not he's, equipped to have that job, I have no idea.
How do you personally feel about that? You don't have any personal opinions? I got you.
Oh, no, I definitely have personal opinions.
Another day.
Personal opinions, I'm happy to share.
If it wasn't Friday, we'd get into it.
We'd get into it. But yeah, here's what I could tell you. And this is my opinion on politics. I hope that the people who are in charge of making those decisions, that it works out. The idea is you want it to work, right? Whether you believe in it or not, you want every decision that Donald Trump makes to work.
Yeah.
Unfortunately, not everybody bats 1,000, right? And sometimes he's going to make mistakes. Sometimes appointments are going to be bad instead of good. And the hope is that he gets more right than he gets wrong. And that's the best we can hope for with any politician.
For those watching at home, I have a script right now where I'm supposed to intro us into the next the next question. And it said, that's true. It's honestly one of the more normal things that's happened in the mortgage world the last 2 months. Today, we're covering all of it. Rates have swung in both directions depending on which day you checked. A housing market that just had its best month of the year. A credit scoring shakeup that could open doors for self-employed borrowers. The Fannie and Freddie soap opera. That's over my head. I don't get that. And then Washington's never-ending affordability circus. And a brand new piece of legislation that just dropped this morning. Cole's got the questions, which is me. Thank you to ChatGPT. And you have the answers, is what it says. So
I hope I have the answers.
Let's see this next one.
I might not have the answers.
So, Rich, rates have basically been doing the cha-cha for 2 months straight. 2 steps forward, 2 steps back. What's actually driving that?
A lot of what's driving that is the war.
The war.
Or
straight up.
Really, it's the war, and it's also uncertainty. That's the thing. Mortgage rates and our economy in general doesn't like uncertainty, right? Because you're trying to forecast, and when we have 30-year fixed rate mortgages, we're forecasting what is going to be the outcome for the next 4 or 5 years. And when you do that, and you have this kind of political climate, you don't really know what it's going to be. Is it going to get worse? Are gas prices going to go even higher? Right? Is it going to get better? Is Israel going to do something to deviate from whatever the plan is and stuff like that? I think we're giving Iran like $300 million in reparations.
How much of this is because of the Middle East versus what the Fed is actually doing domestically?
It's a little bit of a balancing act.
Okay.
I think what's driving rates now more is kind of the uncertainty. What the Fed's challenge is trying to hedge inflation and stuff like that. And so when gas prices go up, right? Well, gas is the key, not only to our economy, but then it becomes the cost of getting goods becomes more expensive. So oranges become more expensive because the getting it to the grocery store is more expensive.
So everything leads back to gas.
Everything leads back to gas, and so then so the Fed is trying to fight inflation, and the war is making it uncertain. I think I was watching a news story. There's we have like an oil refinery or something like that in Oklahoma, and it's at like dangerously low levels of our reserves and stuff like that because we can't get enough oil.
We'll go find some.
Yeah,
it's the U.S. We'll
it's
go.
the U.S.
We'll go find some oil.
Hopefully,
We'll go take some.
But we live in a world economy, and nothing happens in the world that doesn't affect other parts of in the U.S. It's hard to kind of be an isolationist completely, just because there are so many things that are going around. I mean, you have to be kind of responsible for global health, right? We can't have a pandemic because it doesn't matter that COVID started in China. It got here along with everywhere.
Mm-hmm.
And so it really is, everything kind of matters.
So since you are such a charismatic person, you have great people skills. If you were to quit your job today and become a real estate agent, do you think you would be successful at that job?
Wow. Would I be a successful realtor? I would hope so. It's funny because I said it on an earlier episode of a podcast that we did with David Rush. We talked about something that was referred to me when it was introduced to me was the triad of awesomeness. What are you good at? What do you like to do? And what makes you the most money, right? So if you were to put all the things that you're good at, right, all the things that you like to do in like a circle, and then the thing that makes you the most money and converge them, the sweet spot would be the things that where all three of them meet, right? For me, it's very hard because most of the time it's the two things, the things that I'm good at and the things that I like to do, they're okay. It's that thing, the thing that drives you, that makes you the most money. But I think in real estate, the whole idea is listening to what somebody's goals are in terms of what they want to buy and trying to find them the right home and just making sure that you understand their picture. I think if you can do that, you can succeed. The sales part will take care of itself.
And I've known you for a little bit, and you've talked about how when you first got into business, your social battery wasn't always there, and you used to dread it. At what point, when you were grinding it out, trying to become a people person, and for the sake of business, did you realize, I don't hate this anymore, I'm actually becoming pretty good at it?
Oh man, I could tell you that when I used to own a company I used to have a process service company. For people who don't know what that is when you're being served legal papers, a third party has to give it to you. That's what my company did. And I had that company for about 20 years. But I remember when I first, started and stuff like that. And the thing was, people were telling me, like, you have to do sales, you have to do networking, like do networking. And I would dread networking like nobody's business. I wasn't comfortable public speaking. I wasn't comfortable meeting new people. And I felt like everything I did in the networking space was completely insincere, because the way that I used to look at it is, I'm going into a room and I'm going to meet 20 or 25 people. And the only thing I care about is there somebody there who is going to do business with me? And the only thing the other 30 people are there to do is to see if somebody's going to do business with them. Right. So you got 30 people in the room, all there to take and nobody to give. It doesn't really work. And then you're engaging in this like small talk to try to build some kind of relationship when you really only care, are they going to use you? So all the small talk, like I felt dirty.
Yeah.
You know what I mean? It was like this
you
is
care less. We've all been there.
Right. I don't care about your kids.
Exactly.
Do you need a processor? Exactly. Are you suing somebody?
But it's part of the game.
But it's part of the game. And I used to hate that attitude. And then I came across this guy, who's probably the biggest mentor in my life. His name was Leo Martell, and he owned the BNI franchise in Broward County. And his office and my office was next door to each other. And one of the things that he would do is he would come to me and talk to me about networking and just kind of reframing that thing in my mind of how to look at it. Don't look at it. The great power about BNI and the great power of networking is, don't go there to take, go there to give. If you get 35 people in a room in the situation I described, then they're all there bringing something, they're all there giving. The receiving part is easy, right? You just need somebody that it aligns with your business. And that's kind of the foundation of BNI. And so when I kind of reframed that mindset, I hated meeting people a lot less because I was really engaged in genuinely getting to understand them so that I could help them. And I didn't worry about me. And as soon as I stopped worrying about me, the process became a little bit easier. But I remember when I started a networking group, a part of a BNI chapter that met at night. I think at the time we were the only night chapter in the country, and
what time?
5:30.
Okay.
Yeah. Yeah, because most of the time they're in the day or at lunchtime, and we were an evening chapter. Now there's more, but I remember when we were starting it, and I would like get up and have to like say who I am and what I do and stuff like that, and I would be nervous and shaken and all and everything. And the other thing that I would say is practice. Like I did something called Toastmasters. If you've never done Toastmasters, that's a good thing. And just started the more you speak in public and the more you fine tune your message. That's a great other thing about a networking is, especially in a forum like BNI. And this, I didn't mean the podcast to be a referendum on BNI in general, but what it does is you go to a group and every week I'm fine tuning my message. And I'm fine-tuning my message in a way that makes sense. I do this all the time. I understand it like the back of my hand. Ooh, what is that? No, no, but I understand it like the back of my hand, and people, but the general public doesn't. Right. So being able to kind of fine tune my message and make my message resonate to people who don't do this every day is super important. And I've gotten a lot better at that because of all the networking and stuff that I do. I hope that answered the question.
No, definitely. And yeah, it makes me think. So mortgages and the rates and everything, they're all somewhat relative, like to your competitors. Obviously, if there was some outrageous deals you could do, there'd be a big monopoly and you'd probably be out of a job. So a lot of your business is you and you dealing with the clients. Most of the time people are coming to you because do you feel like that the transparency with working with someone and letting them know what's best for them is a big factor of your business rather than just being like a cookie cutter, here's the rate that's best for you? More than advising than just copy cut mortgage.
I know for me, I'm a relationship person, not a transaction. And I think what ends up happening is if for people who are looking for a transaction, what sometimes tends to happen is they get the transaction, they get a loan, but they don't get the loan. The distinction being the right loan for their situation, right? A lot of times people call me and say, this is what I want. And then you hear the pieces of their puzzle and what they're trying to accomplish. And you realize, well, hold on, there's a better way to accomplish that thing. And here's why it's better. So when somebody doesn't take the time to kind of get to know you or doesn't have the experience to take in your information and understand how to take advantage of it, it becomes a little bit problematic. So yeah, I don't. The other thing, it's funny because you talk about it and you touched on a really good question. The rates, by and large, if you're going to a reputable lender, our rates are going to be pretty close to similar, right? Our rates are competitive. We're not the cheapest. There's always going to be somebody willing to do whatever it is that you do for less money. Well, no matter if you have your own business, if you're a pool guy, right, and you're cleaning pools and you charge X number of dollars for a pool, there's a guy down the street who's willing to do that pool for $5 less, always, right? And there's probably a guy willing to do it $5 less than that guy, right? Now, they're not going to do it as good. They're not going to. There's some things that you're going to sacrifice, probably. But if you're just talking about price, there's always somebody willing to do it for less, right? But in a competitive market where you have all people who are reputable, you're going to be dealing with, you're going to be within dollars of each other. One of the things that happens to me so oftentimes is people call up and they ask me, what are your rates? And they get quoted rates all the time from other lenders when they ask that question. And it's completely irresponsible for a lender to give somebody a rate without getting information from a borrower. Because if I quote you a rate without knowing anything about you, what I'm quoting you a number that might not mean anything to you, because I don't know how you're qualifying. I don't know what your credit score is. I don't know how much money you're putting down. I don't know how you're using the property, right? Or what kind of property you're trying to buy. And if I don't know these things and I'm giving you a number, you're taking that number, relying on the fact that I just said that. And then when you come back and say, hey, I found this property, give me that rate. Well, that's not the rate. That's different. So when somebody calls me and asks me for a rate, the number one thing that I tell them is, tell me a little bit about you. And if they go, well, I just want to know your rate. Well, I can't tell you my rate, because do you want to know, here's what I tell people. Do you want to know what my rate is, or do you want to know what the rate would be for you? Right? And most people want to know what their rate would be, not what their neighbor might get.
Yeah, I mean, it makes me like kind of shift into AI almost, because I'm optimistic in the sense that everything with AI will balance back out. For as much that AI can replace, it'll kind of bring to light more things, in the sense that I can go, let's say I want to go get a mortgage. I can plug it all into Rocket Mortgage and their AI, and they can shoot out a number. But then at the end of the day, I don't understand mortgages. I know nothing about it. And I don't want to sit there and read on the website. They're not going to be like doing the, hey, it's because you have this, you have this, you have this. You know what I mean? And like, that's where the human aspect is bigger than ever, because you are going to be there to explain it when AI is trying to take all that away, make it as simple as possible. But it still isn't making it very clear to me why the number is the number. Does that check out or no?
Oh, 100%. I don't think it's funny, because I think there's a big push in AI. AI is probably gonna definitely impact the mortgage industry and lots of other industries. I don't know if AI can mimic the relationship that you get. And part of the other problem is you have all these if-then moments. And when you're feeding into the AI, if you don't feed in all the if-then moments, then you're missing something. And so that's something that the human element can kind of pull out. And the other thing about AI is AI hallucinates. Now, whether or not that's going to go away at some point, I don't know. But right now, you might get information from AI that's not even right.
Yeah, and then also like I don't know if this will make as much sense as it is in my head, but getting a mortgage is kind of an invasive process, because you need to know everything.
Financial colonoscopy.
Yeah, I like that. Do you use that a lot? I've never heard that. That's hilarious. Yeah, exactly. Because like, you might not want to tell the AI everything that the human's gonna be like, nah, dude, you're missing something here. You know what I mean? And it's like you kind of got to do a deep dive with it. So yeah, I don't know. I was just thinking like people could leave stuff out too with that, and it's like honestly, it's user error, because you have to input everything yourself to get that quote. But it makes me wonder, like, obviously you make commission on your business, and with AI, and if they're just doing mortgages, just like shooting them out with their numbers, do you think they're gonna try, like they're gonna undercut, like basically, like, does that make sense?
Yeah.
They're gonna undercut you? I don't know if that's like too much of a
no.
a dive.
I think if you think about it, there are. I would say this: there are lots of people in the world who just want to do a transaction, right? Whether it's good for them, bad for them, or whatever, they just want to do a transaction. And then there are people who want to have a relationship, have an understanding, to make sure they're doing it the right way and they're not missing something, right? And I would say, and to equate it, just to use an analogy, there are people who go to Aldi's and there are people who go to Publix. It's not all about price. And so, yeah, you might be able to save a couple bucks in some circumstances, but the other thing that might happen, and this happens all the time, like with internet lenders even today, is, and I had this story. This was a couple years ago, but it resonates. I had somebody go. They were shopping me compared to Rocket Mortgage, or sorry, I probably shouldn't say Rocket.
All right. We'll bleep it out.
We'll bleep it out. We'll bleep it out.
We'll bleep it out.
So they were comparing me. They were getting a rate quote, and I quoted them, and my rate was like $300 less than Rocket with the closing cost. It was the exact same rate. My closing costs were just a little bit cheaper. The difference is that their credit, they had 45 days to close, and their credit score was right on the border of, if I could improve their credit score a little bit, I would save them money, because credit plays an important role in your rate. So I gave them a breakdown of exactly what to do to fix their credit, to get their credit score up. And instead of being a $300 difference to the Rocket quote, it became a $2,800 difference.
There's more consulting in what you're doing,
Exactly.
rather than,
and so they would.
it's more concierge than it is. Yeah. But you're saying a good majority of the people do just want that number, and they just, you said it a second ago.
Yeah, there's a percentage of population who just don't care. Just tell
Get
me
it
what
done.
it is. There's a percentage of people who buy generic toilet paper, but there's enough people buying Charmin that Charmin does a pretty good business, right? And there's two different feelings on your tush.
Yeah. and what's the ease like if someone were to be a repeat customer with you rather than an online one, like an online getting a mortgage, because you already have information on it?
Yeah. So repeat customers, and a lot of our customers are repeat customers. That's kind of the goal. But a repeat we've already got a lot of their documents. It's a matter of updating some of their documents. We're familiar with their situation. They're familiar with us. So there's a trust factor both ways that I think helps facilitate the transaction, makes the transaction easier and smoother.
I feel like that might be easier, and I don't know if I'm missing something, but if it was like, hey, I'm looking to buy a vacation home, and let's say also in Florida, and then you start doing the work for me, and you're like, I need this, this, and this, rather than going online, and it would kind of like, it's a little bit more work almost. It's actually more work going online, because they're going to tell you the same thing, but you still got to go and ask for it.
Yeah, so it's funny, just because if I think about like the application process, right? You could fill out the application, you can go online, you could fill it out. It probably will take you 15 or 20 minutes, right? Or I could take the information from you and it'll take me 10. And I'll get more information than they'll get.
With consulting.
Well, because what happens is you're feeding it the information, I'm getting the information, and as I'm hearing the information the way you're telling it to me, I'm also resonating what that means. But when you're typing it in, that's not happening, right? So then what happens is the AI or whatever will spit out, hey, I need this kind of stuff. But it didn't say all the other stuff it's going to need that it's going to ask you for later when it figures it out. Whereas I'm going to figure it out in the beginning so that I'm able to say, oh, this guy's, been divorced. He's paying alimony and child support. Now that I know that, even if he's not paying child support, just that he's divorced, I need to get that information. So I'm going to be able to have that information, whereas AI might not. And so it does kind of expedite the process. And like I said, if the choice is talk to me for 10 minutes or do AI for 15 or 20, is AI saving you time? And I'm getting a bigger picture, getting to understand the file a lot better, more intricately. Because again, you're only, like you said, user error. You're only giving the user as much information as you know to ask. The system doesn't know what you're missing, what you're not getting, whereas I'm able to figure that out while we're talking.
And then we've talked about this before, but you work with a lot of self-employed individuals, and you say more. I mean, a lot of the times they're working in their own business, and all of a sudden they start to figure it out, and they are making, like, it scales pretty quickly when a business is successful, obviously. Because mostly successful people will approach you to buy a home. It's not the failing businesses that are coming to you. But when to simplify it, so I don't have a lot of history. Like I haven't been working a job for 8 years, but let's say in the next 2 years I start making really good money, and I'm like, hey, I want a home. Does that just mean I have to just put a little bit more down than someone who would have that 10-year history, maybe 8-year history?
Well, I think every situation is a little bit different. It really depends on how the business is qualifying from an income standpoint, and a credit standpoint too. So there are loans that are available to all types of people, self-employed or people who have W-2 jobs, that you can do a low down payment. Like if it's your first house and you could put 3% or 3.5%, 5% And then typically, if you have good credit and you can't go that traditional sense, you could do as little as 10%. You might pay a little bit more in interest rate, but in terms of keeping the down payment at a minimal, that's one of the ways that you could be. But what happens is there's a balancing act, because when you're self-employed, when you're self-employed, if your accountant is doing his job, he's minimizing your tax liability. Minimizing your tax liability is great for the IRS. It's great for your personal pocket. It's great for the CPA, but it's diametrically opposed to what's important for a lender, because a lender wants to see how much money you make, right? And so, what part of my job and part of the things that I do really well, and why I work with so many self-employed people, is because my job is to determine what can you really afford besides what your tax return tells me you can. So in the situation where I'm buying a first home or something like that, and I want to do low down payment, we might look and say, well, what does the tax return say that this number is? And can we find a home in that price range? Or we might look and say, okay, we might want a bigger home or a little home that's a little bit more expensive. How do we make that happen?
I got you. We could pivot back into these.
Either way, but however you want to do it. I like the surprises.
Yeah.
Although I didn't read the questions before. Anyway.
No. I thought the realtor one would be funny just because you work with so many.
No.
Be like, you ever thought about taking your hand at it? How you'd be with the real estate?
So,
it's a grind.
Real estate agents have it a lot tougher. I think that by and large, there's more loyalty to a lender than to a realtor. They're giving us, like, we're doing that financial colonoscopy, like I referenced. They don't want their financial information spread all over town. Mm-hmm. So I think there's a little bit more loyalty to the lender than it is to the realtor. I much prefer enjoying supporting their business as opposed to being in their business. And there are people who have a special skill set. It's a grind. It's not an easy thing, and there are people who are unbelievably successful at it. Yeah,
I like this one. Mm-hmm. If you're a borrower right now, do you lock or do you float? What's your honest gut feeling?
Oh, okay. So here's the way that I approach that with most of my clients. The devil you know is better than the devil you don't. So what that means is, if you find a house that you like and you're going to make a monthly payment that you can afford, right, then lock in the rate. Because why risk it getting worse? Okay, nobody. I've seen people who were, like, even if they're overpaying, like when house prices are going up, right? If we're going to use that as a comparison, I've seen people who lose their mind because they could have bought 5 years ago and they didn't. But I don't see anybody who's angry that I paid $20,000 more than I should have 5 years ago.
Mm-hmm. That's a good point.
Yeah. I mean, I could have got away. It's the same thing. The other thing that happens with rates is when you find a property, you're going to buy the home. You marry the rate, or marry the home, but you date the rate. Mm-hmm. So the mortgage doesn't have to be forever or as long as the home. So if it's comfortable, you lock. Right? If the rates improve in a year or 6 months or enough that it makes sense to refinance, you always have that opportunity. And it's just math. If I'm going to be in the house for at least 3 more years and I can make my money back in 2, then it makes sense to refinance.
Where did the name Loan Doctor come from? Was that self-proclaimed or someone?
Oh, somebody. Oh no. So somebody gave it to me.
Okay.
But somebody gave it to me because I used to say that getting a loan is like a financial colonoscopy.
I gotcha. That's a good quote. You should put that on billboards.
It's
I'd get attention.
It would, and
it's not very warm.
It isn't, but what it does do actually in a relatively short time is kind of set the expectation. Mm-hmm. So here's the thing. If you think about it from a bank standpoint, a bank is lending a person money, right? And they're charging. And if you think about it, think of the bank like as an investor, right? A bank is an investor. Their investment is you, and the interest rate is their rate of return on their investment, right? Well, the more I know about that investment, the more I know about you that is positive, the more comfortable I'm going to feel in that investment. And if I feel more comfortable in that investment, I'm willing to take less of a return. So the more I know about you, that makes sense. The better, the lower the lower your rate is going to be, because I don't need as big a return, because I'm really comfortable knowing that this person's actually my investment's going to pay off. But if I don't know a lot of stuff, if I don't know anything about you, the only thing I know is that you can rent the property for X and the mortgage payment is Y, right? And the guy's got, horrible credit or marginally good credit. Well, he's probably going to pay me back. He wants to keep the property. He is making money, but now my risk is a little bit greater. If my risk is greater, what do I want in return? Nobody would be buying Bitcoin today if it was paying like a CD.
I'm trying to think, because like a lot of these are like very techy. You know what I mean?
Dumb it down.
Yeah.
And you know what? If you have a techie question, let's take the techie question and break it down into a way that makes it simple.
What's usually a girl's reaction when you tell her what you do?
Oh, geez, the girls love it.
Yeah. Okay.
No, so as a single person,
Yeah.
I mean, I think that.
How do you say it if a girl came up to you and said, "Hey,
oh,
I'm a girl"? You go,
so
what,
you're
what
a
do you
girl,
do?
what do I do for? Well,
Yeah.
if somebody asks me what I do, what I usually tell them is I travel. I'm a traveler. I'm a guy who wants to see the world.
Wow.
When I'm not traveling,
We call that a horny answer.
okay, no,
We do.
Hold on, because now when I'm not traveling,
I'm a traveler.
when I'm not traveling, I help turn home buyers into homeowners.
Okay. So what I gathered from that right there is you just broke down that. So you want to reply with you want to make yourself interesting, but you also want her to know you're like semi-retired.
No,
a little bit. When I'm not traveling, I work.
No. What I think what happens is, if somebody wants to get to know me, I'm not defined by what I do. So that's if you want to get to know me. What I do.
If a girl goes, "How do you make money?" Do you just say, "All right, I'm out of here"?
Oh no. I've never had a girl ask me how I make money.
Yeah.
But there's a difference between tell me about you and what do you do for work, right? Mm-hmm. If somebody asks me what I do for work, it's the exact same answer. I turn home buyers, people who are looking to buy a home, into people who now own a home.
I'm a traveler is a crazy line. I might take that, actually.
Yeah, it works.
I don't really got the money for that, though.
It's a panty dropper.
It's wow, that's insane. Yeah.
Can I say
we
that?
We can leave that in, or we can take it out. Yeah. Yeah, that's a good answer, honestly.
All right, thanks.
I'm a traveler. It's like, hey, honestly, it answers so much. It's like, hey, I have the money to travel, and if you're into that.
Yeah.
That's a good answer, dude.
Thank you very much.
Wow, I didn't think I'd get any insight from that, like for my anything for myself out of that. But
I'm glad I have a little bit of game.
And then they go, "What's your favorite place you ever been?"
Oh, my favorite place I've ever been was probably Antarctica.
Okay. See, that's an elite answer.
Elite answer.
Because how many people have been in Antarctica? I haven't.
Not a lot of people.
Not a lot.
It's really cool, but it's not my favorite place for the reasons that you would think.
It's not probably the most comfortable or like.
It was
luxurious stay.
Yeah, no. The thing about
it's pretty cool. You've been to Antarctica.
Yeah, it is. But if you take it and conceptualize it, it's the one place on the planet that is more like the way it was designed by God, if you believe in that. It's the one place on the planet that's the least undisturbed by what's happening in the world.
Yeah.
And so, kind of feeling that is impressive. The other thing that I took from it when I was down there, which I thought was just an interesting little factoid, was the surface of Antarctica it's the one place on Earth that's the most similar to Mars.
To Mars. Interesting.
Yeah. So if we might be colonizing Mars, you might want to go to Antarctica.
Get a feel for it. Get a feel for it.
Yeah.
Yeah. Just out of curiosity, on a scale from like 1 to 10, 10 being like the most expensive, what kind of trip? How much is it to go to Antarctica if you had to give it? Like, I'm not saying like Is it like a more expensive trip than like if you wanted to go somewhere super?
Well, it depends where you want to go.
If you want to do a nice Europe trip, is it like kind of the same?
It depends where you want to go, how in depth and stuff like that, and
There's multiple destinations within Antarctica.
There is, but like how deep you go into the continent. You know, you could there are some cruise lines that take you to the outskirts. You know, but if you're gonna go on like a smaller, intimate boat where you can go into like the coves and stuff like that. Then you know it's going to be probably 2 to 3 times more expensive than like a typical cruise like on Royal Caribbean or Norwegian.
What was the food like?
Food was outstanding.
Really?
The food was out. Yeah, oh yeah, on the cruise that we were on. If I was going to give a plug to Atlas, I was on the Atlas World Voyager.
Okay.
The food was outstanding. It's not a cruise. It's not a cruise the way that you think of cruising on like those big mega boats. It's more of a experience. It's what was the word that they used? Oh, I can't think of it right now, and I had it off the tip of my tongue. Oh, it's an excursion.
Okay.
So there's a lot of learning and stuff like that. But if you're into that, it's kind of fun.
Yeah, it's not more of a booze cruise.
No, it's not. Oh no, it's funny. They give you free alcohol and all that kind of stuff on this particular cruise. I don't think hardly anybody drinks, or at least not drinks in excess.
Here we'll wrap it up with. I got one question.
Expedition. That was the word.
Expedition.
It's an expedition cruise.
Yeah. That's another horny word.
Yeah, there you go.
Is it true 2 people with identical credit histories could get scores 10 to 30 points apart depending on which model the lenders uses?
It's possible that 2 people with a similar background can have different credit scores.
Is that not really a good question?
No, because you could talk about credit. Credit's really important. Here's what I will tell you when it comes to credit. One of the things that happens is a lot of times people get their credit score from like Experian or the Credit Karma or those third-party agencies. That what they do is they give you like a FICO score simulator. It's not an actual score from FICO. It's a simulator, and their goal is to try to guess based on your credit history what your FICO score would actually be.
Yeah. And
some creditors rely on that, but for a mortgage, you need a mortgage requires a tri-merge credit report that has a FICO score. And FICO has a proprietary formula. They're not telling, Vanguard or these simulator engines, they're not giving them the formula. And I don't know if this is true or not, but I believe it is. I think every now and then FICO F's with the formula so that it makes it harder for those companies to kind of hit it on the nose. So they might change like 1 month, this is more important than this, and this is more important than this, to kind of screw up the system. So if you want to apply for a mortgage, it's best to get a mortgage credit report and don't rely on the credit score that you might get from a search engine. Those are a little bit different. The other thing that happens too is that when you get a tri-merge report, there might be details on a credit report that is reporting on 2 credit report agencies, but not on the one that you're pulling. So you do your Experian score, for example, and it's not showing a collection account that's actually appearing on the other 2.
It's such a headache that it's like, hey, Rich, figure it out for me, please, and get back to me.
This happens all the time. Is tell me what I qualify for, right? And if you want, we can talk about how that conversation kind of goes, right? I try to make the process really, really simple, right? Tell me how much you feel comfortable paying. Right? After you tell me how much you're comfortable paying, the next thing I want to know is how much money do you have? So when you're buying a home, there's down payment, there's closing costs, right? And there's ways to mitigate some of that with seller concession or down payment assistance programs. So tell me how much money you have. The next thing I want to know is if you've been looking at property, right? Because a lot of times people are looking for they start kind of looking before they even get ready to talk to a person. If you're looking for a property, what's been the price range of that property that have caught your eye that you said, oh my God, I like that?
Yeah.
And the reason that I asked that question in that way is because if you tell me what your monthly payment is, right? And let's just say somebody says their monthly payment is $2,000, right? and I've got 5% to put down, or I've got 20,000 to work with, right? And they tell me, well, I'm looking at homes that are 400,000. Well, now I know the homes that they like and the payment that they want don't match. So now it changes the dynamic of the conversation, right? To, well, what if the house you loved, right? Would you feel comfortable paying a little bit more, or was there any homes in a lower price point that you think you might like, or it might even be a conversation of what if you spent more money, because some people have it and don't want to spend it. So that's kind of how we get into the weeds of making it really, really simple to break it down to the key elements. Because once I know your goals, right, I know how much you want for a monthly payment, I know how much money you have, then I know what the price point is, right? Now I got to see, can we find a house at that point? And that's where it becomes really important that I have a good relationship with the realtor, to see what we could do to make that, to find that property that kind of fits those metrics. And sometimes people come to me who aren't mortgage ready, and we're saying, okay, well, we want to buy this. Well, here's what we have to do to make that happen.
So step one of the home buying process is going to the loan officer first. Do you think do a lot of people make the mistake of just looking for homes and being like, I want this home, and then
yeah, people
all the time.
People like looking at homes. They don't like getting a financial colonoscopy.
Yeah, that's the thing. I'm kind of a liar too. So if you were like, "Hey, what do you want to spend?" I'd probably just lie about it for no reason. So I'd want you to do the colonoscopy first,
right,
and then be like, "Hey, this is kind of what you're ballparked at."
Right. If you tell,
that's how you should do it,
well,
right?
Well, not necessarily, because sometimes people come to you and they don't.
Because sometimes you can get a house more. You're just gonna have to be in a different financial situation, like you get more money down, or
right, exactly. You look, if somebody wants a $2,000 payment, they want to buy $1 million house, no problem. Put 900,000 down. It can happen. But the idea is a lot of times, like when I ask somebody that question, it says, well, how much do you want to pay? I don't really know. I haven't thought about it. Okay, how much are you paying now? Right, and are you renting? Yeah. How much is your rent? Okay. Would you feel comfortable paying $500 more than that number? Yeah, I'd be okay with that. What about $1,000 more than that number? Yeah, I'd probably be okay with that if I own my house. What about $1,500? No.
Yeah.
And so it's just a matter of taking the time to find where that point is. One of the other questions too I ask people is, if you had a choice between putting more money down to keep the payment where you want, or the payment was a little bit higher than what you desire, which one of those two would matter to you less or more, right? Like which one would you prefer?
Interesting.
And so if somebody said, well, I'd rather have a $50 higher payment and not have to bring more money. Okay.
Yeah.
All right, great.
Does AI do that? Probably not, right?
I don't know if AI sort of asks
it's a
the
good
questions
method.
and stuff like
what are
that.
you comfortable with?
Right.
And yeah, you need to be. How often are people not very honest with you when it comes to not to air anyone out?
Yeah, no. That's I'm not going to name anybody specifically.
Yeah.
But I think that it's not often where people are dishonest with me or not. I don't even want to use the word dishonest because maybe they just don't know. Sometimes they're not familiar with their credit score. And it's funny in the process. I've been doing this for a while now, that I could actually have a conversation with somebody and kind of have an idea of where their credit score is.
Okay.
Just based on the conversation and what we're talking about and the way we're talking about things. And it's I'm not going to say it's 100% accurate, but I'm pretty good.
Yeah. Okay.
And
you're the credit score wizard. That's hilarious.
Yeah. So sometimes people talk about that. Sometimes people with W-2 income don't necessarily lie about their income.
Yeah.
They just might not know, well, we can't count your bonus and all that kind of stuff.
Okay.
And people who are self-employed, the funny thing about people who are self-employed is that a lot of times they focus on how much revenue their company generated, right? But it's not about how much money your company generates, it's how much you keep. Because the portion you keep is the portion that you could use to help pay for a mortgage.
But then what happens if because I keep a lot of almost all of my money in my business, right? And then let's say I could pull if if you're like, oh, well, you're not really paying yourself this much, so your track record, but I'm like, hey, I could pull out a good amount to do this. How does that work? Does that make sense?
I think I understand what you're asking if you have money in the business. But so let's say let's just
like if I don't pay myself for like 6 months.
That's okay. But your business is a LLC, right?
Mm-hmm.
Okay. So when you do at the end of the year, right? If whether you take the money or not, your business generated revenue, right? The gross revenue that the business generated is the amount is the gross revenue, and the amount you kept is the money that was left over after you spent everything. Now, whether you kept it in your bank account at the business, it's your business, it doesn't matter, or you kept it in your personal account, neither one of those, it doesn't matter which place it's in, we're going to kind of treat it the same, right? But I think what ends up happening is people are focused on the fact that my business generated $1 million and not so focused on, yeah, but it cost you $900,000 to get that million. And then what did you really make? I had a lady wanting to do a loan, self-employed. She paid herself $500,000 a year, and her business lost about $400,000.
I don't even understand that at all.
Well,
I'm just not an adult.
She okay. So you're self-employed, right?
Yeah.
Okay. You could pay yourself, right? $25,000 a month if you wanted to, right? You could, if your business had the liquidity to do that, you could give yourself $25,000 or even claim $25,000. But if your business isn't generating enough revenue to pay you that $25,000, right? If your business is only generating 15 and you're paying yourself 25, at the end of the year, there's going to be a $120,000 difference.
Yeah.
Right. So did you really make 250 or 300,000? 25,000 times 12 is 300, or did you make 300,000 minus the 120,000 that your business lost?
I gotcha. Hey, like you said, colonoscopy.
Yeah, no,
it'll get figured out.
Yeah, it is, and like I said earlier, the more we know about you, the better your terms are going to be more often than not, as long as everything we know is favorable. Sometimes it's not favorable, and you don't want the bank to know anything. And that's okay too.